milestone of the Reserve Bank of India's journey. It's my pleasure to extend a warm welcome to each one of you present here to this conference, which is being held in this beautiful and vibrant city of Bengaluru, a city which for many years now has been at the forefront of India's technology revolution. I would like to extend a special welcome to the esteemed participants who have joined us from many parts of the world. Thank you all for accepting our invitation and for being here. I sincerely hope that you will find the deliberations and interactions during the global conference enriching and also productive. The theme of this year's conference, Digital Public Infrastructure, that is DPI, and Emerging Technologies, is timely and relevant. It will shape the future journey of almost all economies of the world. Over the last decade, the traditional banking system has undergone an unprecedented technological transformation. By all indications, this process is likely to become even more intense in the coming years. In my address today, I would like to highlight the important role that digital public infrastructure has played in India's digitalization process and its contribution to inclusivity in Indian society and the economy. India's experience provides an effective digitalization strategy for public authorities, including central banks. I would also like to touch upon certain key issues underpinning artificial intelligence systems and the use of digital public infrastructure in addressing the issues in cross-border payments. Let me first focus on the meaning and the overall positive impact of digital public infrastructure. Digital public infrastructure broadly refers to basic technology systems created mainly in the public sector that are openly available to users and also to other developers. DPIs, that is digital public infrastructures, are scalable and thus can support systems that operate on a population-wide scale. They are interoperable and therefore spur innovation by being accessible to innovators. They are also cost efficient by virtue of their economies of scale. These three advantages of scalability, interoperability, and cost efficiency hold the potential to accelerate financial inclusion and transform the lives of people by overcoming traditional barriers like physical distance, documentation, and transaction costs. It can be said that DPI has enabled India to achieve, in less than a decade, levels of financial inclusion that would have otherwise taken several decades or even more. DPI spurs market innovation by reducing transaction costs, democratizing access, maintaining competition through interoperability, and attracting private capital. DPI, that is digital public infrastructure, offers a path to effectively manage critical national infrastructure also. In times of crisis, as during the COVID-19 pandemic, India and a few other countries were able to leverage digital infrastructure for vaccination programs and targeted transfer payments. Notable examples of DPI in other countries include verifiable digital identity systems such as Colombia's Cedula Digital, Nigeria's National ID or bank verification numbers, the Philippines' PhilSys, Rwanda's digital identity system managed by their National Identity Agency, Saudi Arabia's Nafath digital identity management platform, Singapore's SingPass, and the United Arab Emirates Pass of the UAE, and similar other initiatives by several other countries. The G20 Digital Economic Working Group developed the Global DPI repository, that is GDPIR, Global DPI Repository, which is a comprehensive resource hub, pooling essential lessons and expertise from G20 members and other participating countries. Its primary aim is to bridge the knowledge gap in the choices and methodologies required for the design, construction, deployment, and governance of DPIs. The final report of India's G20 Task Force on Digital Public Infrastructure was released on July 15 this year, which has, among other things, contributed to accelerate the acceptance of the definition and framework of DPI. This agenda will be taken forward for implementation during the subsequent presidencies of the G20. Let me now turn to India's experience with digital public infrastructure. India's DPI journey is a unique model wherein the basic technical infrastructure, that is the technological infrastructure, is built, operated and managed in the public sector, while the private sector accesses the DPI to create innovative customer-facing services and products. The advantage of developing DPI in the public sector is that typically the private sector would be averse to capital investment to create infrastructure with uncertain returns. Privately created infrastructure may not also be amenable to democratized access or interoperability. The unique approach of India is therefore conducive for designing services and products which are competitive in the open market. In the area of finance, systems that facilitate digital payments, digital money, digital identity, and digital processes are the key components of DPI. India has carefully crafted its DPI strategy by focusing on three critical dimensions: digital identity, bank accounts, and processing infrastructure. Aadhaar, which is India's biometric identity system, provides a single and portable proof of identity. Around 1.4 billion Aadhaar numbers have been generated for the residents of India, which is near universal for the entire Indian population. Similarly, access to banking systems for the unbanked segments has been enabled through what we call the Jan Dhan accounts, that is basic, which is broadly equivalent to basic savings bank deposit accounts. Under the Jan Dhan scheme, more than 500 million bank accounts have been opened for beneficiaries. With regard to processing infrastructure, basic connectivity has been ensured through availability of affordable mobile phones and internet. The number of mobile-based internet users in India currently stands at around 0.9 billion, that is as of May 2024, with mobile teledensity at 83%. Even in rural areas, the mobile teledensity is around 60%. The trinity of Jan Dhan accounts, Aadhaar and mobile phones, popularly known as the JAM Trinity, has provided the base DPI infrastructure which is being leveraged for multiple value-added services. Of 67% of the beneficiaries under the JAM Trinity initiative, the participation, 65% of the beneficiaries under the JAM Trinity initiative are essentially from rural areas, and over 55% of them are women. This clearly demonstrates the role of DPI in promoting inclusion. Another example of DPI in India is the Account Aggregator Framework, a regulatory initiative of the Reserve Bank of India. This framework facilitates consent-based sharing and aggregation of financial information of customers among eligible financial system participants in a secure, transparent, and efficient manner. It enables MSMEs in particular to access cash flow-based financing from lenders with minimal documentation. The Reserve Bank over the years has facilitated the development of robust systems in the country for both retail and wholesale payments by supporting the creation of digital infrastructure like the Infinite banking network, the SFMS messaging system, RTGS and NEFT payment systems. In fact, RTGS and NEFT payment systems are currently in India 24/7/365, and we launched this during the period of the COVID pandemic. The current ecosystem of digital payments in India offers a unique bouquet of simple, safe and secure options for instant or quick transfer of funds, both large and small value for businesses as well as for individuals. Unified Payments Interface, or UPI, a real-time payment system, was launched in India in April 2016 by the National Payments Corporation, NPCI, and it has played a significant role in the growth of retail digital payments in India. NPCI itself was promoted by banks under the guidance of the Reserve Bank of India. While initial participants on the UPI platform were banks, non-bank third-party app providers and use of QR codes have all combined in popularizing the UPI. It has since emerged as a robust, cost-effective and portable retail payment system and is attracting active interest across the globe. Continuing on this journey of digitalization of banking services, last year we launched a pilot of a technology platform which enables frictionless credit. And this initiative is very important for all policymakers, for all authorities, whether they are from governments or central banks or they are private banks or private financial companies. From this initiative which we launched last year, it's still in the pilot mode, and it's called, it's basically a technology platform for enabling frictionless credit. From now on, we proposed to call it the Unified Lending Interface. I repeat, the Unified Lending Interface, that is ULI. This platform facilitates seamless flow of digital information, including even land records of various states from multiple data service providers to lenders. This cuts down the time taken for credit appraisal, especially for smaller and rural borrowers. The ULI architecture has common and standardized APIs designed for a plug-and-play approach to ensure digital access to information from diverse sources. That is, information relevant to a lender for giving out a loan to a potential borrower. And the entire system is consent-based, that is based on the consent of the potential borrower. So the requirement of the data privacy is also fully protected. This entire platform and this initiative reduces the complexity of multiple technical integrations. It enables borrowers to get the benefit of seamless delivery of credit, quicker turnaround time without requiring extensive documentation. In sum, by digitizing access to customers' financial and non-financial data that otherwise resided in disparate silos, ULI, that is Unified Lending Interface, is expected to cater to large unmet demand for credit across various sectors, particularly for agricultural and MSME borrowers. Based on our experience from the pilot project, a nationwide launch of the ULI will be done in due course. Just like the UPI transformed the payments ecosystem, we expect that ULI will play a similar role in transforming the lending ecosystem in India. The new Trinity, the earlier Trinity was Jan Dhan Aadhaar Mobile, JAM Trinity. We are calling it the new Trinity. The new Trinity of JAM, UPI and ULI will be a revolutionary step forward in India's digital infrastructure journey. Central bank digital currency, that is CBDC, has dominated recent policy discourse across the world. In India, the Reserve Bank launched CBDC pilots in both retail and wholesale segments in late 2022. The retail pilot currently has over 5 million users and 16 participating banks. While retail pilot started with initial use case of payments, currently both offline and programmability functions are also being tested. The programmability feature of CBDC could serve as a key enabler for financial inclusion by ensuring delivery of funds to the targeted user. Let me illustrate this by an actual pilot that was launched recently. Tenant farmers often find it difficult to access agricultural credit for inputs and raw materials as they do not have the land title to submit to the banks or to the lending institution. However, programming the end use for purposes of agriculture, that is programming the end use. If it is for fertilizer, it can be programmed accordingly. And supposing the loan is being given for particular purpose of, let us say, buying milch animals, it can be programmed accordingly. Or if it is meant to deliver a particular benefit, a subsidy from the government together with a loan from the bank or the non-banking financial company to the borrower, it can be programmed accordingly. In this case, it is programmed in a manner that it goes to the tenant farmers who do not have the land title, and otherwise they would find it difficult to take a loan from a bank because the bank doesn't have the document to establish that he is the title holder of the land. So tenant farmers often find it difficult to access agricultural credit for inputs and raw materials as they do not have the land title to submit to the banks. However, programming the end use for purpose of agricultural inputs can give the required comfort to banks and thus establish the identity of a farmer not through his land holding but the end use of funds being disbursed. Yet another path-breaking use case is farmers getting purpose-bound money through programmable CBDC for generation of carbon credits. Other new use cases aimed at testing features such as anonymity and offline availability are proposed to be rolled out gradually. It is important to emphasize that there should not be any rush to roll out system-wide CBDC before one acquires a comprehensive understanding of its impact on users, on monetary policy, on financial system, and on the broader economy. Such understanding would emerge from generation of user data through pilots, and actual introduction of CBDC can be phased in gradually over a period of time. Undoubtedly, CBDC has the potential to underpin the payment systems of future, both for domestic payments and also cross-border payments. So I have talked about two major initiatives of the Reserve Bank in the digital public infrastructure space. One is the ULI, which was launched last year, which is in pilot mode. The other one is the CBDC, which was launched towards the end of 2022, and it's in the pilot mode. And we are eventually making CBDC and UPI interoperable so that the reach and access, our objective of spreading financial inclusion through these payment systems can become more broad-based and go to every nook and corner of a large country like India. Now let me now turn to artificial intelligence and DPI. Today, as artificial intelligence is making forays in the financial sector in the form of services like chatbots, internal data processing for intelligent alerts, fraud risk management, credit modeling, and other processes. Integrating this cutting-edge technology into a robust and responsible DPI presents an opportunity to amplify the capabilities and efficiency of DPI even further. As the report of India's G20 Task Force on DPI states, the seamless fusion of DPI with AI would propel us into a new world of digital public intelligence. Integration of AI into financial services brings in significant opportunities for all stakeholders. For customers, AI enables hyper-personalized products and faster, more relevant services. Financial institutions like lenders benefit from advanced tools for risk and fraud management, streamlined operations, and reduced compliance costs. Regulators can also gain enhanced oversight and real-time monitoring capabilities, which would improve regulatory enforcement and market stability. Financial institutions like lenders, as I mentioned, they would benefit from advanced tools for risk and fraud management, streamlined operations, and reduced compliance costs. Now, such advancements, however, come with serious challenges. Data privacy concerns arise from handling vast volumes of personal information. Ethical AI governance is essential to ensure fairness and prevention of bias. Financial institutions must ensure that AI models are explainable, that is, ability to explain why certain results are produced. AI technology can also be misused to spread misinformation, potentially causing severe damage and disruption to DPIs as well as other digital systems. They can also damage the reputation and operations of financial institutions. Recognizing the same, international bodies such as the OECD have outlined core principles governing AI, which include inclusive growth, respect for rule of law and human rights, transparency and explainability, robustness, and safety and accountability. In December 2023, the Hiroshima AI Process Comprehensive Policy Framework was established. It includes a set of guiding principles and a code of conduct, marking a significant step towards a coordinated global approach for responsible development of AI. India is the lead chair of the Global Partnership on AI for 2024. This multi-stakeholder initiative with 29 countries aims to bridge the gap between AI theory and practice by supporting cutting-edge research and advancing applied activities. The Ministry of Electronics and Information Technology of Government of India has been taking important initiatives in this area, such as setting up the AI Research Analytics and Knowledge Dissemination Platform, which will focus on developing indigenous AI-enabled products and solutions to tackle India-specific challenges and complex real-life problems. These initiatives underscore India's commitment to not only capitalize on potentialities of AI technology, but also to ensure robust and ethical governance. I am pleased to know that in this conference, a panel discussion will focus on emerging technologies. I am sure they will look into various issues associated with technologies like artificial intelligence. It is important to be proactive to leverage the capabilities of new technologies. But at the same time, it is essential to be abundantly mindful of the associated risks and challenges. I feel it would be prudent to keep in mind the following three aspects. First, AI is data-driven science. The authenticity of data being used in training the models, possibility of biases, concerns of data privacy need to be carefully examined. Second, AI promises to make processes simpler and efficient. It can also emulate decision-making to a great extent. However, when it comes to regulated financial institutions, there should be careful adoption of AI in critical decision-making segments, for example, in loan sanctioning. While AI can definitely assist the process, the institutions using them should have proper understanding of the models and ensure accountability of the outcomes. And third, going beyond understanding the risks posed by AI, financial institutions should clearly outline the liabilities and ensure a calibrated and responsible adoption. Central banks and governments on their part should focus on fostering the development of trustworthy AI, keeping data privacy, explainability, accountability and transparency at its core. Finally, let me turn to DPI and cross-border payments. A recurring agenda of importance across multilateral settings, including G20 and international standard-setting bodies like the Committee on Payments and Market Infrastructures, that is CPMI, has been to bring efficiency to cross-border payments. A lot of initiative and experimentation in bilateral and multilateral arrangements among various countries are already underway. While much efficiency has been achieved in case of wholesale markets, the retail cross-border space is still fraught with multiple layers that add to cost and delays in cross-border remittances. Needless to say that modern technology offers solutions which can smoothen these frictions. With emergence of fast payment systems across countries and experimentation around CBDC, new possibilities are opening up to bring in greater efficiency to cross-border payments. Maximum efficiency gains in such initiative would come from ensuring interoperability as a key design element. Ideally, while the legacy payment systems should be able to connect to each other, and so should the CBDC systems, one country's legacy system should also be interoperable with another country's CBDC. Actual implementation of interoperability would definitely pose challenges and may involve certain trade-offs. Technical barriers may be surmounted by using common international technical standards. Further, the governance structure or management framework for long-term sustainability also needs to be finalized. In this journey of attaining harmonization and interoperability among countries, a key challenge could be the fact that countries may prefer to design their own systems as per their own domestic considerations. We can overcome this challenge by developing a plug-and-play system which allows replicability while also maintaining the sovereignty of the respective countries. India has made some progress in this direction, and we would be happy to develop a plug-and-play system for the benefit of the community of nations. The UPI system has indeed the potential to evolve into a cheaper and quicker alternative to the available channels of cross-border remittances. A beginning can be made with small value personal remittances, as it can be quickly implemented. Let me now try and conclude. India is a vast country with great diversity. A solution that works well in India has the potential to be customized to the unique requirements of any other country. Accordingly, the conference planners, that is, these conference planners have organized, and I must compliment my colleagues in the Reserve Bank who have worked on this in collaboration with many of the financial sector participants. Now, the organizers and the planners of this event have organized a deep dive session on day 2 on India's UPI, especially for the international delegates. I would request all delegates to participate and derive benefit from the various sessions, and also share their own experiences which could provide learnings for all. I also invite you to the conference exhibition showcasing some of India's innovations relevant to the theme of this conference. As you may recall, the theme of India's G20 presidency in 2023 was One Earth, One Family, One Future. It underlies India's thought process in how India sees itself in the world as being a part of one family with a common future. At the Reserve Bank, we look forward to the journey towards RBI at 100 with considerable optimism. We are constantly working on devising policies, approaches, systems, and platforms that will make our financial sector stronger, nimble, and customer-centric. With these words, I wish you all a pleasant stay and productive discussions. I wish this conference all success. Thank you. Namaskar. Good morning, Namaskar, governors, deputy governors, board members and other senior officials from central banks, secretaries and senior officers from Government of India, distinguished speakers, panelists and other invitees, managing directors and CEOs of banks,